Hello, this is Jim Welch. In this video, we'll show you how to take a return or give your customer a return on an invoice that has been posted. So very quickly here, I've called up the invoice. This is the invoice that I want to grant a return on. And so I click this return hyperlink, and it'll bring up a little window. And the quantity that I want to return is just one, because you can choose your reason. They've returned one, they've ordered 100, and they're returning one. So the default amount that we're returning to them is going to be the price of the unit plus the tax, and that's completed here automatically. So 25.43, and the GL account to record the return expense in. This is the debited account. Typically, well, you could choose one of two things. I think I would probably choose my my revenue account. So I'm going to debit revenues. And thereby reduce my revenue because the guy is returning this part. And then there's the account that you want to credit, and typically that'll be a cash account, the account that we dig into and hand money over to our client. So let's just leave that like that. I'm not going to return these to inventory, and I'll submit this. And let's see here. Oh, maybe this was US currency. We'll try maybe US currency. There we go. So that was that. So let's take a look at the resulting transaction. The refunds are right here, so I'll look at my refund. I've credited revenue, so I'm not selling, or I'm selling, reducing revenues by 25.43, and I'm giving my client 25.43 in cash. So that's that. Now let's take another example where we take another unit back, but we're going to return it to inventory. So I'm going to call up that link, that window again. Same thing again here. So we're decreasing revenue by 25.43. We're giving away cash from our cash account, and I'm going to move up this to 1, and so the quantity to return to inventory is going to be 1. And here, I think the appropriate balancing revenue account is going to, or balancing account for the inventory adjustment, that's going to probably be your cost of sales. So purchases and cost of materials. And then I'll say give my variance reason of returns. So I'll just post that now. Reload the page. We show our second return here, that it's a refund, and we're also returning something to inventory. So it's sort of a two transactions that are taking place. The first one will be identical to what we did the first time. The second transaction is related to the inventory adjustment, and that's going to take $10.30, so your material cost, from your expense account and stuff it into your inventory account. So that's all you need to know for granting returns. Thank you.